You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Bitcoin, Ether, Ripple, Litecoin, and more. Cryptocurrencies and other digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity. Provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments on everything from coins to tokens, futures, and even OTC options. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. This program is brought to you by Genesis Volatility, also known as GVol, home of institutional-grade crypto options analytics. Whether you're trading CeFi options or DeFi options, cryptocurrencies move. Use GVol Analytics to analyze implied volatility, model realized volatility, structure positions, and unlock alpha. For more information, visit gvol.io. That's GVOL.io. Now it's time to dive into the exploding world of cryptocurrencies and digital assets. It's time for the Crypto Rundown.
All right, everybody. That music means it is time once again for the Crypto Rundown, the program here on the Options Insider Radio Network, where we go beyond the traditional world of options and all that fun stuff. You know, your VIXs, your Teslas, your SPYs, and look over the fence into what's going on in the world of crypto. Going to talk, of course, the spot and the futures and the options, also the volume, the volatility, the OI, the SKEW, all that good stuff, and a whole bunch more. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the aforementioned network, reminding you, first off, if a lot of these topics are new to you, I know for a lot of the audience of this program, not as familiar with the world of options, make sure you're also, A, subscribe to our full network so you don't miss anything, and B, make sure you're really tuned into those Education Wednesday programs, Options Bootcamp, Options Playbook Radio. They will really take you from A to Z in the world of options. You can do it at your convenience on your own schedule. Can't beat the cost. It's all free there. So check those out if you're confused by some of these terms we're throwing around like SKEW or volatility or OI or any of these other things we're going to talk about on the show today. Of course, keep those questions and comments coming too. We do have to hear from all of you folks out there. Let's see who we're hearing from on the show today. A guy who's perfectly suited to help us bridge that gap between the traditional world of options and traditional investments into the world of all things digital. Mr. Bill ULIVIERI from CENACLE Capital Management, as we know him around these parts. Mr. Bill, welcome back to the Crypto Rundown, sir. It has been too long.
Thank you, Marcus. Great to be back. It's a lot of cool stuff happening out in the world of digital assets.
There are indeed a lot of cool things happening. So let's get to it with the Bitcoin breakdown.
It's time to explore the latest trending activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody, welcome to the Bitcoin Breakdown, the portion of the show where we break down all the activity in the world's leading digital asset, at least for right now. Talking the big dog, talking Bitcoin. That big dog, a little bit smaller coming into the show this week, unless you've been under a rock. Even people who we just want to avoid all things crypto whenever possible, even they had a hard time avoiding it over the course of this past week. Of course, the endless drama, that has unfolded ever since Musk really and Tesla really bought into Bitcoin. We're seeing the other side of that now, as of course he has now made some comments about the environmental impact of Bitcoin, and perhaps Tesla isn't going to take it for new cars after all, and all this other ensuing back and forth drama that we've pretty much seen in the post-Musk Bitcoin era out there. More volatility, more craziness. Seeing a lot of that coming back into the conversation here this week. Kicking off the show, we had Bitcoin looking a lot different than it did this time last week. On our show last week, we were just shy of 57,000. 56,991. Coming into today's show, we were threatening the 40K level, listeners. You're down about 14,000, almost 14,100 points from last week's show. We were just shy of the 4,300 level. This pretty much a blood red day across most of the major crypto assets out there. That said, it does seem like there's a little bit of a rebound going on out there. We'll get to all of that in a little bit, but we did see some dramatic swings. Like we said, we got a high over the course of the past week, nearly 58,000, 57,700, and again got as low as around 42,100 or so. So it seemed like it might be threatening to break the 40,000 level, even though it didn't quite get there. And of course, this is leading to all manner of hyperbolic headlines around the planet. Folks out there lumping together all the leading cryptocurrency assets. So, of course, your Bitcoins and your ETHs, also your Doges and everything else, to these crazy headlines like a $500 billion wipeout in crypto valuation over there at places like MarketWatch, where they point out that Bitcoin off nearly 30% from its high of around 65,000 in mid-April. And, of course, Doge feeling the heat, down about 36% from its high right around Musk's SNL appearance. And now, of course, feeling the heat out there as well. So a lot to unpack. Bill, you picked a good time to join us here on the Crypto Rundown. There's a lot to discuss. So let's start here in this mad, manic world of all things Bitcoin, this post-Musk environment we find ourselves in, where they took the two most volatile things you could think of, Bitcoin and Tesla, and merged them together and created this Voltron-like beast where the two of them kind of move in lockstep now. Well, what's been lighting up your tape going into the big rally we saw? Then, of course, over the course of this past week, this equally aggressive sell-off to the dark side, sir.
Well, what comes across my desk, Mark, is, first of all, the thing with Elon and Doge and all that noise, I mean, from my perspective, it's almost comical. No, it's not that it's almost comical. It is comical. I mean, the big picture is that digital assets are a real thing. And this noise that we're watching, what we see on Robinhood and Doge and, people trying to push this thing around, even Elon being on Saturday Night Live, I find the whole thing to be rather humorous. But for people like you and I mean, that we actually had to dodge Doge. We had to dodge real bullets on the trading floor. We were chomping at the bit every single day, grinding it out, and we were focusing on things that were coming at us in 20 different directions. So I kind of ignored all that hype because, from my perspective, again, I'm using old school, old gangster, OG technical analysis tools on digital assets, and I got a sell signal on April 5th. Bitcoin versus GLD gold. I had to sell Bitcoin and buy GLD. So I find it really interesting, and this is a contrarian indicator in general, that just when the hype was the highest, when the FOMO was there, when the you only live once was out there, and Bitcoin really didn't get above that 60,000-ish area, not with much conviction when you consider how much institutional conversation was coming down the pipe. And so I'm always kind of, we did take a little bit of heat on the trade, but it's worked out really great to our advantage. And again, like you and I, we pick out anomalies. Like I think we're very sensitive not to following mainstream media, but to see what's actually happening. And I found it also very interesting that the Grayscale Bitcoin Investment Trust, GBTC, that most people own in IRAs and 401ks, has been trading at a 10 to 16% discount for a number of weeks. So it kind of reminds me of, other S&P 500 at a discount to cash, or, like when stocks of companies trade below the combo price, like, the combo trades below the stock price. You want to buy the combo, buy, call, sell, put, and then sell the stock. So there's really interesting developments from our perspective, but the retail side, I think, is you just got to leave it behind in many ways.
I'm glad you mentioned those Grayscale trusts as well. We've getting a lot of questions about those from our audience, as for reasons you could probably guess, Bill. They are really one of the only games in town right now if you really want to put something crypto related into your securities account outside of diving into, like, let's say a Mara or one of these mining related names. We've getting a lot of people hitting us up about those. As you mentioned, they have been trading to all sorts of weird premiums to the NAV out there. What are your thoughts on these? Have you been utilizing these for any clients, or have the premiums kind of kept you away, Bill?
Well, unfortunately, like any closed-end fund, whether it's a real estate investment trust or any other kind of high-yielding closed-end fund, you have to live with the net asset value, right? Either it's trading above at a premium or below at a discount, depending on when the dividend payments are and what the yield is. So I would say that for me, being in the regulated space, this is really the only product that I feel comfortable with trading for my clients. Now, we have a handful of clients that had the conversation. They're really into it. And they have given us authorization, limited discretionary authority to trade the GBTC products in their account, just like I do IWM or QQQ and SPY and TLT and things like that. But again, we've been very light on the crypto stuff, coming into the spring and especially in the last few weeks. And there's right now there's not that much out there for the registered investment advisor like myself. So we have to embrace these products in the meantime. They're rolling out, maybe a half a dozen more between Ethereum Classic, Litecoin, and then like the top 10 cryptos. Zcash also, I think, is coming down the pipe. So again, little by little, we're seeing more and more adoption in the digital space. We're going to be hopefully getting ETFs maybe in a year, although we said that 3 years ago. We're headed in the right direction, and we're trying to skate ahead of the puck.
Well, Bill, if you believe our audience, we did a poll a couple of months ago asking them if we're going to see an ETF by the end of this year, and they were overwhelmingly, over 2/3 said yes. So if you believe our audience, Bill, we're already halfway there. But I'm not sure if I'm quite as optimistic as they are. We had the folks from TMX on the network a couple of weeks ago, of course, the Montreal Exchange, and that's a land to the Great White North where they have approved several Bitcoin ETFs. So that's an interesting thing. A lot of people thought maybe that would kick the approvals of ETFs here in the U.S. into high gear. It does sound like this new SEC administration maybe not overly optimistic or enthusiastic about all things crypto. We'll talk about some more options you may have, pun intended, Bill, on the registered side and listed side a little bit later. Let's break down some of the vol and some of the other analytics out here in a very tumultuous week in the crypto space. Remember, listeners, you guys can kick the tires for yourselves on all of this. You know where to go. Genesis Volatility. It's GVOL, GVOL.io. That's the place to go to kick the tires and light the fires on all of these analytics, the SKEW, the vol, the OI, all this good stuff, and a whole bunch more. If you want to see how the term structure is shaping up, maybe you want to do some calendars out there, all that fun stuff, GVOL.io is the place to go. And if you have no idea what the heck I'm talking about, then check out some of those educational shows I mentioned earlier. Then you can dive into all the fun over there at GVOL.io. But let's dive in together now, shall we? I like to look at the hourly volatility. It's one of the few fun metrics that the folks at Genesis put out there. It makes it a nice snapshot of what's going on out there in the Bitcoin marketplace. And as you might imagine, that vol has been moving of late. Bill, one of the things we've been talking about for a while here on the show, the better part of the last couple of months is, man, Bitcoin vol has gotten anemic, certainly for an asset that has become synonymous with volatility over the last few years, seeing it languish in the mid to low 70s and actually break into the 60 handle at one point there. That was pretty light. And of course, it was starting to behave like precious metals volatility, which is it would kind of languish for a while. And if there was a pop, it would pop kind of aggressively and then come right back off again equally as aggressively. So the spikes that we saw in Bitcoin volatility were very short-lived. One of the questions we had on the show for a while now is this the new regime or is this kind of an aberration? I had a hard time picturing Bitcoin staying at 69 vol for too much longer. And we certainly saw that change at least this week. Remember on our last show, it had already ticked up a little bit, got up to the mid 70s again. It was about a 77% on our last show. And then we saw it spiking quite a bit, at 124% coming into this show. So quite a bit higher. And then, of course, intraday, actually today, this morning, we saw it spike up to 151%. Undoubtedly, a lot of that on the heels of folks thinking maybe we were going to break that 40,000 level to the downside and probably loading up on some premium, loading up on some hedges against that. That really drove that vol to effectively double since our last show. So everyone out there has kind of been wringing your hands saying, man, what's going on with this Bitcoin vol? Can it stay in these low levels forever? At least this week, the answer is a resounding know. Now, if we come right back off this again, that'll be very informative for us. It doesn't seem like we are, though. Of course, there's so much going on. We are flirting with this near downside. Bill, another interesting topic related to this I'd like to pick your brain on as well. We are seeing this somewhat equity reminiscent type of volatility and skew out here, where as we drop to the downside, we of course see vol ticking up pretty aggressively, which is reminiscent of your SPYs and most of your other big indexes and equities out there, where to the downside is where the bid is to vol. And we've had some guests come on recently and postulate that as Bitcoin has gotten more widely accepted, as more traditional asset managers have come into the world of Bitcoin, we're going to start seeing more of that. We're going to start seeing Bitcoin behave like a more traditional asset, particularly when it comes to metrics that you and I are familiar with, things like the SKEW starting to line up like a traditional equity index and things like that. Are you seeing that as well, Bill, or are you not feeling what these people are putting down yet?
Honestly, I don't. I'm not going to embrace that just yet, Mark. It's a little bit too soon to tell. And from my perspective, when you look at the S&P 500, like SPY, the ETF was listed in the early 1990s. You and I, first became more familiar with the S&P 500 probably in the mid 80s, like, when I started on the trading floor at the CBOE. So when you think about how long these products have been around, and you say that the volatility goes from 12 to 50, that to me in a 40-year-old product almost seems more of an anomaly than something like Bitcoin that just trades down to 70, right? I mean, it almost seems like Bitcoin is not that bad in terms of its volatility compared to other products like the Russell 2000 or QQQ. But having said that, you see, I still think that Bitcoin is more like corn or soybeans or wheat, where it has a negative skew to the downside and a positive skew to the upside. Because if prices get too low, or electricity costs get too high, or the political environment is too negative, the miners are just going to turn their machines off, right? And the supply is not going to be generated for new tokens to come out in the place, right? In the economy of Bitcoin. So I'm really surprised about any kind of positive downside skew in Bitcoin. Although I will say this also, and this is a little bit of the conspiracy theorist in me, and that is I find it interesting that, in the 1980s when the Hunt brothers had closing only on their silver as they tried to corner the market in silver, or the Ferruzzi brothers in maybe the late 80s at the Board of Trade in soybeans, closing only, huge volatility. In 1989, when the property under the Imperial Palace was worth more than the state of California, the real estate value of California, we saw new products come out on the market that would permit people, especially institutional and professional investors, to sell short these products. So I'm wondering, and I find it interesting that just when Bitcoin kind of makes a high, not only the last time in the 2017-2018 cycle, but now the Mercantile has listed the smaller contract for Bitcoin. And you can't sell Bitcoin short unless you have futures contracts and you have derivatives and you have options. So I just find all these things interesting. And I'm not a proponent. I have not embraced the downside skew, equity-like skew for Bitcoin just yet. I think it's different. I think it's more like you said, precious metals perhaps, or like a commodity like corn or wheat or crude oil.
Let's get into that skew a little bit then. It has been swinging around pretty wildly, as you might imagine, since our last show, listeners. Our last show was about a 6.35. And, getting back to what Bill was alluding to, traditionally the longer term bias to the skew and Bitcoin is traditionally to the upside, because it's all the hodlers and the upside optimists out there who want to get themselves a little bit of Bitcoin. Of course, with these aggressive fluctuations to the downside, we have seen puts start to line up more aggressively. In fact, it's been another ongoing conversation here on the show the last month and change about puts really catching up in the total OI. They're pretty much neck and neck out there, and how maybe that's starting to change things out there a little bit as well. Certainly a lot of swinging in the skew. It was a positive 6.35 on our last show. It was coming into today's show, negative 16.5. That's showing you, listeners, a lot of action in them there puts over the course of even just today. Again, as we're threatening this 40,000 level, I think a lot of folks are starting to come out for those puts. We saw it spike to as high in between our shows outside of last show. It's been negative almost every session since. It got as high as about negative 4.5. That was about it. And other than that, it was pretty much all much below that. So showing, at least over the course of the past week, listeners, it's kind of been all puts all the time. Overall OI, we saw a little bit of an uptick up about 4,000 contracts total, about 176,000. It was 172,000 on our last show. Of course, all this downside has taken off some of the notional OI out there. We had about 10 billion open on Deribit on our last show and 11.5 billion open across all the other venues when you add in your OKEXs and your Bit.coms and LedgerXs and CMEs and everything else out there. Obviously, a lot less on the tape this week, about 8 billion only open on Deribit. So we're off about 2 billion from last week and about a little over 9, about 9.2 billion when you add in all the other different venues out there. Interestingly enough, too, we have seen some of those puts come off since our last show. We've seen calls tick up. There are about 99,000 contracts open right now, net on the OI on the call side. It's up about 7,000 versus puts down to 75,000. It's down about 6,000. I'm sure some of that is as we've been breaking through strikes to the downside. One of the things you have to do with puts, listeners, is you have to take them off to get the benefit of them. If you just sit on them, like if we're rebounding right now, like it seems like it out there, those puts are going to lose a lot of their luster very quickly. So once you start breaking through strikes to the downside, if you're holding puts on the 45,000, 50,000, 40,000 strike, whatever it might be, you have to start taking those off. So that's probably what we're seeing out there with puts now. The farthest behind calls we've seen in some time out here in Bitcoin, at least for a few months out here, with about almost 100,000 calls open versus about 75,000 on the put side. Let's look at the volume, and today is pretty much the mother of all days out there right now, listeners. It was otherwise an active week, a pretty active week. We saw it flirting with that previous 2 billion worth of notional volume high we've hit a couple of times before, flirting with that again a couple of times this week. But today, just kind of blowing the doors off. As of the start of the show, already 3 billion worth of notional had traded already just on Deribit. Shows you how much action is going up out there today. Listen, I wouldn't be surprised if we see maybe double the 4 billion level getting out there pretty soon by the end of the day today. Just how much action. Again, as you start flirting with that 40K level, people come out of the woodwork. And that's certainly what we've been seeing out here. This is already, again, almost double some of the more active days we've seen in the past couple of weeks. We saw 1 billion multiple times. Again, we saw 2 billion a few times as well. We've already beaten that today. So who knows? The sky's the limit out there in terms of volume. Breaking it down by where you folks are lining up on an expiration basis, it still is the quarterlies, which to me is kind of surprising because when we see these aggressive moves, usually the front month contract may start making it up because people want more gamma. They want to get more access, more exposure to these sharp swings in the underlying, listeners. Instead, it's still June. That's topping the list out here. 51,000 contracts open in June. That's about down about 1,000 contracts from where it was this time last week. Number 2 is May. That's a pretty distant number 2. It's only 40,000 contracts open in May. That's down about 3,000 from last week, and bringing up the rear there, number 3D, so about 25,000. That stayed pretty steady over the course of the past week. So a lot of back and forth over the course of the past week in both June and May, but net closing. Again, I think a lot of that coming as we're blowing through these put strikes and folks are taking them off to get some of the value of those hedges. Speaking of strikes, let's see what the top strikes are, the size positions that are still open out there right now in Bitcoin options. Last week, it was the 50,000 strike that was dominating the tape. That is still the case, even though it's a much smaller position. Last week, it was about 14,000, almost 15,000, about 14,800 open on the 50,000 strike. It's still number 1 today, but it's down to about 12,500. So it's down about 2,300 contracts. As again, we've blown aggressively through that 50,000 strike. So maybe not surprising, taking some of that off the table. Number 2 is the 60,000 strike. In fact, I think these strikes are pretty much unchanged in terms of order from last week. It's just the volume has come in a little bit. 60,000 strike number 2 with about 10,500. That's down about 1,300 contracts from last week. Number 3, the 40,000 strike with about 10,200. It's down about 1,200 from last week. Number 4, now we're getting back into the outlandish strikes. Number 4 is the 100K strike. Still in our top 5. That's got about 9,500 contracts open. That's pretty much unched. So nobody taking off their 100,000 strikes this week, even though we're less than half of that now out there. And number 5 is still the 80,000 strike with 8,600 or so. That's pretty much unched from where it was this time last week. So the order of our top 5 still pretty much the same, just some of that volume coming off the table a little bit. Speaking of volume, let's go on out there to the CME front and see what's lighting it up. Bill, you kind of alluded to these earlier. There have been new offerings in the CME suite since the last time you and I chatted. Of course, we have the options on the futures, which are still, to me, a relatively new addition. They since have also launched ETH futures since your last appearance, and now more recently, micro Bitcoin futures. So for a guy like you who's a registered investment advisor, there are now more alternatives to the traditional grayscale Bitcoin trusts out there. Have you started looking at these more? Are these starting to make up more of your portfolio over there at CENACLE, sir?
Well, honestly, Mark, not really, and I'll tell you why. When I trade an exchange-traded fund or stock on a New York Stock Exchange, that is in alignment with my Series 65 securities license. If I trade contracts that are considered futures contracts, that opens up a whole nother CFTC regulatory burden, I guess, responsibility on the shoulders of our firm. And so I'm just not willing to go there just yet. I find that my client is primarily 401ks and IRAs. And if anybody just has a regular investment account, they're typically more equity-based mentality. So they're okay with the GBTC. I have had a couple of conversations with people in the world of futures. People that trade, E-minis and things like that. They're slightly more professional, and I really don't. I think that they're smart enough and mature enough and disciplined enough in their approach, where trading futures contracts and options are way more in their Rolodex than my clientele. So I'm not looking right now that closely at the futures contracts. Although, again, it adds one more piece of price data. It adds one more chart to look at. I love looking at divergences and things that are different. I love looking at, again, that option combo, the call, put call parity and things. So all these things just kind of add to the data that helps me make decisions, but I'm not actively or even remotely trading those for my own clients. This is still new. I mean, we're still at the second inning here.
Yes, not quite there yet. Let's see if any others are trading these things out there this week. And we had a decently active week. Let's start on the Bitcoin options front out here at CME, listeners. Remember, one of the narratives we've had on the show for a while as well is, can these options really start picking up the volume? And for a long time, they've kind of languished. Not really doing a lot of paper. Seeing better paper out there this past week on the 13th and the 10th, both a little over 100 contracts going up, which again, doesn't sound like a lot, but it's a 5X pretty beefy contract out there. So you're talking 500 really plus Bitcoin equivalent changing hands on those days. We saw other volume throughout the rest of the week, less than 100, but still probably not, again, one of the more active weeks we've seen out there. Same story for the futures, but the futures have always been pretty active. Busiest day last week was about 17,000 contracts, much less most of the other days, around 10,000 or so. So a pretty decent week, not the most active week we've seen in the futures, but a decent week out there in the options. We did see pretty much the best week ever, even though it's a very short history for these new micro Bitcoin futures. Remember, these are a 10th of a Bitcoin, listeners, and they're pretty much a 50th the size of the traditional Bitcoin futures that are out there right now. So a lot smaller than what CME was already offering. And these clearly seem to be resonating out there. We saw 22,000 on the tape already today coming into showtime. 53,000, that's a new record, I do believe, back last Thursday, and 27,000 trading on the 12th. So clearly these smaller, more bite-sized contracts are starting to kick in. I am looking forward to, you heard me ask Tim about this at CME on our TWIFO show a couple of weeks ago, hold their feet to the fire on the options. I do think once we have options on these micro contracts, we will start seeing a lot more retail being able to play in these products. And that, I think, will certainly go a long way towards helping a lot of you get access and exposure to these that were maybe traditionally the 5X contract was just too intimidating, too expensive for most of you out there. Speaking of things that are expensive, or perhaps less so this week, let's get on into the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody. Let's do it. Let's explore the altcoin universe. As you might imagine, as we start here in the top 10, these valuations going to be down a wee bit from our last show. Let's start at the bottom of the top 10 is Bitcoin Cash at about $19.5 billion for number 10. Number 9. The names always bring a smile to my face in the altcoin realm. Internet Computer ICP, 24 billion, pretty much even. Number 8 is Polkadot, still hanging out there in the top 10, 35.8 billion. Number 7, our old friend XRP, one of the few that's actually showing a little bit of green on the screen this week. It's at about 150 exactly coming into the start of the show, puts it up about a little over 2%. So bucking the downside trend for the rest of the other major digital assets out there. That's worth 52.7 billion out there. Number 6 is Tether, 58 billion. Number 5, cover your ears, Bill. It's Dogecoin. It's worth an appalling 62.5 billion right now, even though that is less than it has been certainly at the apex of the Musk SNL appearance, the infamous appearance now. Number 4 is Cardano with 62.8 billion. Number 3, Binance Coin, fighting its way up to the top here of the altcoin top 10 here, 77 and about a half billion. Number 2, it's ETH, 378 billion. That's off quite a bit from last week. And number 1, back below the 1T level, listeners. We're back below the 1 trillion worth of market cap. Yes, it's Bitcoin. 807 billion, I should say, back below the 1T. Bill, does that make you sad, sir, that Bitcoin is now back below the 1T level? Any thoughts on some of these other altcoin that are popping up here? Are you a big slinger of internet computers, sir, ICP?
I had an associate contact me on the new ICP, and it reminded me a lot of like Beyond Meat, like the IPO that just took off crazy when it first started trading, or the potentially 42 billion valuation on WeWork that eventually never really took off. And I think the banks have taken over all that debt and scooped up all those properties in the sub 10 billion category. So this ICP is so new. I will not touch any of these ones that come out of the gate so hot. But in terms of the other cryptocurrencies, I mean, decentralized finance, the DeFi tokens like SUSHI Swap, Uniswap, Yearn Finance, very interesting projects. They have some history to them. Doge, still not sure what to make of that, to be honest with you. XRP, I love that one. And so, I kind of pick and choose. There's some really interesting projects. And at the same time, here on my screen right in front of me are page after page after page of cryptocurrency projects that are down 99.36% from their all-time high, down 97%, down 86%. Some of these back in the day, in 2017, 2016, were like, hey, this sounds really interesting. I should probably buy some of this. And then they lost most of their value. So I trust, Coinbase and the people who are listing these tokens. I trust the exchanges who are listing them to an extent. But again, you still have to do your due diligence. And I never buy a crypto that's just too soon out of the gate without showing some kind of, a decent white paper or some price history.
Let's look at some of that price history right now. Let's start off in the number 2, of course, which is ETH. Had a bit of a rough run over the course of the past week. Of course, on our last show, it was 41 and about a half. So well north of where it found itself today. Coming into the start of today's show, it was 32.80. It dipped down as low as 31.18 just in the past 24 hours. And that's, of course, the low for the past week as well, listeners. So crazy stuff afoot out here. Was ETH going to break the 3,000 level just as Bitcoin was threatening 40,000? And that's where I'm sure a lot of this vol really started kicking in and a lot of the panic out there. Let's get on into the volatility first. ETH is one of these ones where it hasn't been languishing quite as much on the vol front as Bitcoin. On our last show, it was 113%. Coming into today's show, 131%. We saw it spike to almost 150%, got up to 149%. That was just earlier today on the heels of this aggressive sell-off down towards the 3,100 level. We saw a lot of that vol. So ETH firmly back now in the triple digits after a brief sojourn below it. SKEW, same deal. Last show, it was all calls all the time. It was 13.05. Coming into today's show, a -2. So a 15-point swing in the SKEW. As go figure, some folks may want some puts when it's selling off roughly 25% over the course of the past week. Now let's look at the volume out there. Notionally, it's been pretty active, even though overall, perhaps not as active as you might think, given the price action we're seeing out there in ETH land. We hit a high recently on Deribit of around 1 billion worth of notional. And we pretty much hit that again over the course of this past week. Hit it on the 12th of last week, hit 1 billion. Coming into the 13th was 884 million. And kind of surprisingly light today. Coming into the start of today's show, about half a billion already was on the tape, but it wasn't exactly blowing the doors off. Given the fact that we've seen such aggressive price action, both to the upside a couple of weeks before and now to the downside this week in ETH, a little bit surprising we haven't seen more follow through on the volume side. Let's look at the futures over there in CME land. Remember, they did list ETH futures now as well to see if we see anything similar. It looks like the volume numbers are decent, but again, not blowing the doors off out there as well. So action, a lot of price action, not a ton of follow through on the volume front out here. Let's look at the overall OI and see how things are lining up from an ETH options perspective. Coming into today's show, we had about 876,000 calls open. That's up actually substantially, which is interesting given the fact that we pretty much done nothing but sell off since our last show. That's up 62,000 contracts from last week. Puts 748,000. That's up about 9,000. So they're both up, but calls taking the lead firmly from the puts. Maybe some folks thinking the sell-off is overdone. Maybe they're overriding these calls. Either way, calls really leading the dance over the course of this past week. Net OI, hour by hour OI, it's up a little bit from our last show. It was 1.53 million last show, up about 1.57 million contracts open right now. So up a bit, but not a ton. Again, something similar playing out to what we saw in Bitcoin, I'm sure, as we're blowing through strikes to the downside. Folks are taking some of those puts off, hence why there's so many fewer puts than calls right now. When you break through your strikes, if you have a hedge on, listeners, you have to take it off. Otherwise, it's not really going to do much for you. So I'm sure that's driving a lot of the action out there on the downside in ETH right now. Again, looking at the overall notional OI out there in ETH land, pretty similar levels net overall from the notional OI. It was about 6 billion last week and about 6 billion this week. Again, reflecting that perhaps not a volume explosion that you might assume given the fact that ETH got cut by roughly a quarter over the course of the last week. Let's look at where you folks are lining up from a month and indeed a strike perspective out here in ETH land. ETH's been a little bit of a different beast than Bitcoin for some time when it comes to options positioning. First off, there's some weird in-the-money strikes. Those are still there. We'll get to those in a second. But also, it's been all quarterlies all the time. The front month has never really been the place for the action in ETH, and that continues to be the case right now with June, a firm number one, just a couple of contracts shy of 500,000 open. That's up 37,000 contracts from last week. So you folks, even with a lot of this aggressive sell-off, you're still playing in June 1st rather than May. May is a distant number two, only 306,000 contracts open, even though that's up an impressive 45,000 this week as well. And D's number 3, 279,000. That's up about 18,000. So you folks are still playing predominantly in the quarterlies out here in ETH. And let's look at the strikes. The 5,000 strike was number one last week. It is still number one with a bullet this week. And in fact, there's more open on the 5,000 strike now than there was a week ago. There's about 89,000 contracts open on the 5,000 strike. Now it's up about 8,000 from this time last week. So selling off roughly 25%, opening on the 5,000 strike over the course of the past week. Number two, the now more relevant, now actually pretty much at the money, 3,200 strike. That's got about 88,000. So that's neck and neck with the 5,000 strike. It's very close, number two. That's up about 7,000 from last week. So a lot of new positioning, which is kind of interesting. Number three and number four, you know they are. They're the 400 and the 320 strikes. They're both at about 63,000 and 62,000 respectively. Both of those unchanged. Whoever put those on way back in the primordial ooze days of ETH still has them on, hasn't touched them. And number five is the 3,000 strike, also with 55,000 contracts open, also unchanged out there. Bill, I know you watch ETH quite a bit. I know that's always been one of your favorites out there in the altcoin universe and indeed in the broad crypto space. You've been a big proponent of ETH, as well as all of the subsets and ecosystems that have spun off of it over the years. What are your thoughts on some of these volume numbers? And does any of this surprise you? Maybe the fact that we're not seeing more options volume in a product like ETH, even though it has been cut by roughly a quarter over the course of the past week, sir?
Well, I'm looking at the strike prices and the values that you had just mentioned. Whether the numbers were up or not in open interest. And I'm looking at a chart at the same time. And so, again, Mark, I know I sound like an old grandfather, but when we went back to the trading floor, we had guys that were strictly looking at the numbers and their sheets and their theoretical values. Then you had some of the independent traders that were scalpers, and they had resistance levels and support levels for the S&P 500 or for whatever stock you were trading. And one of the things I like to do is, again, use these OG technical analysis tools on cryptocurrency. And so from my perspective, the far right-hand side of the bell curve, like if you're looking at a pendulum swinging all the way to the right of overbought, that overbought limit is $3,629 in Ethereum. And we traded it up to almost $4,400. Then the fair value of a 10-week moving average is roughly $2,450. And the far left side is roughly $1,250 in Ethereum. So just a standard bell curve, you could be long the 5,000 strike, you could be long the 3,200 puts or that particular strike, and the 3,000 strike makes total sense to me, because in terms of just its 10-week moving average and some old school bullish trend lines, we could definitely trade 4,000 to the high side, 2,500 fair value, and maybe 1,300 on the low side. So all of it makes sense. Kind of seems to me as though you could be long put options, long futures, and you could just trade this thing back and forth like a little heartbeat, like a old fashioned clock just ticking back and forth. So I see a lot of opportunity trading here within these levels, and these strike prices don't really surprise me. I think it's awesome, to be honest with you. I think there's some smart institutional or trading money behind these numbers, in my opinion.
And like I said, I know you've been more interested in ETH for a while. You mentioned at the top of the show you curtailed your Bitcoin kind of early on that trend, and we're kind of timely on that. Have you done anything similar with ETH as a result of this run-up? Have you done any curtailing or adjusting either in the run-up or in the sell-off over the course of this past week?
Yes. Well, when you look at the entire ecosystem, the entire basket of cryptocurrency, Ethereum and Bitcoin are number one and number two. And there's some exceptions to that, like XRP might be considered something different. But all the other tokens all fall under those two bins, whether it's a digital asset or currency, kind of like Bitcoin, or is it an operating system or a non-fungible token or decentralized finance that falls under the Ethereum umbrella. And so I would say that I probably haven't traded that much Ethereum, for clients that is, but I find that when I give advice in the cryptocurrency space, I definitely look to Ethereum because so much falls inside that basket. And so all the non-fungible tokens. So people take cash, they buy Ethereum, they take the Ethereum and they submit it to an exchange, or they submit it to some kind of swapping service, and then they get their favorite token, right? They get their favorite altcoin. And so part of the Ethereum rally is due to the fact that you have to own it in order to get anything else. So it seems like Ethereum, to me, fundamentally, its core value proposition as a global operating system seems to be waning a little bit, and it's more like a toll booth, a gateway in order to get everything else. And also, I find it also interesting that Ethereum, while making its highs, we're still kind of on Ethereum 1.0, and we have new projects that are competing with Ethereum that are like an Ethereum 3.0. So it's going to be really interesting to see how this thing plays out. I like Ethereum, always loved it, love the developers, love the community. But I'm just wondering if it's not moving too slow for the rest of decentralized finance and the rest of the cryptocurrency space. So until then, I love it, but I'm beginning to kind of fall a little bit out of favor with it just in the big scheme of things.
Well, you're right. That whole DeFi ecosystem is just exploding. And there could be an argument maybe that maybe the mothership, ETH, that spawned a lot of it, perhaps could be left behind as we had many guests come on the show over the past couple of years and argue that the ecosystem, the subset of ETH is really going to take over and drive the ship eventually. Maybe you could argue perhaps we're at that precipice. Of course, the recent lofty highs out there in ETH may argue against that, but of course come off of that a little bit as well. So interesting, fascinating stuff. What are your thoughts out there on these overall valuation levels of ETH, listeners? Too far, too fast? Has it sold off too far, too fast? Are you like Bill and a lot of our guests? You think maybe the ecosystem they're in is perhaps more interesting these days? Hit us up. Let us know as you break down some of these other final altcoin out here. First off, we've got Ripple. Ripple actually looking effectively unched from our last show, right around $1.50 last show and about $1.50 this show as well. I think it's up about a penny. But again, today, bucking the trend, one of the few names that's actually up out there today. Bitcoin Cash, Bitcoin SV also getting hit over the course of the past week. 375 was the downside move in Bitcoin Cash and about $90 in Bitcoin SV. And I mentioned your feedback. Let's get to some of that right now with your crypto questions.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, everybody. Let's do it. Let's get to some of your questions. You guys send us questions. Sometimes we turn the spotlight back on you like we did last week. We asked you a question that was designed for broad market options traders, but also could clearly be applied to the crypto space as well, at least at the beginning of last week when we posted this poll. We asked you, hey, markets, including crypto, were hovering at or around all-time highs. Volatility was trending aggressively lower. That was until the middle of last week. So what is your go-to strategy in this environment? Gave you 4 choices, very basic choices. Are you buying calls? Are you buying puts? Are you doing covered calls? Or are you selling those puts? And 40.3% of you, it was surprisingly contentious. 40.3% of you came in say you were buying puts, both in the broad market and indeed in the crypto space, which the latter at least worked out pretty well. And we're selling off in the broad market right now as well. So maybe that wasn't the worst trade either. Buying calls came in. Actually, I take it back. Covered calls came in at number 2, 28.6%. Buying calls, number 3, 27.3%. And rounding out the bottom, no love at all. Short puts, only about 4%. This week, we asked you a question that's a little bit more near and dear to the audience of this show. You guys can participate for yourselves over there at Options. The poll just went live before the show today, and it'll be live throughout the week. So get on over there at Options on Twitter. Make your voice heard. But we asked you at the beginning of the show, a lot of red on the crypto screen this week. Is this a momentary blip or a sign of things to come? Quite simply, if you could buy yourself a 10% out of the money call, so obviously a call position where you want a nice 10% rally that expires at the end of this year, December 31st, on one crypto underlying, which one would it be? We gave you 3 choices along with the ever popular other. We have Bitcoin, we have ETH, we have the infamous Doge, and then we have other. We're already getting votes for XRP out there right now, as well as Revon Gorgeous chiming in saying he likes Queen Shiba, aka Shiba Inu coin out there. So one of the legion of Doge spinoffs that are causing a lot of consternation out there. Mr. Bill, I'm curious for you, if you have a vote in this, if you had to buy a 10% out of the money call right now in one of these products, or maybe you have a different one you want to write in, have at it. And then B, more importantly, what do you think our audience is voting for, sir?
I'm going to throw my head in the ring for XRP. I like that project. It seems as though the founders and the developers and people behind that project are doing a pretty good job of defending themselves against the lawsuit by the Securities and Exchange Commission that claims Ripple is an investment security. And I'll throw my head into that one. I'll go with that. Final answer.
Interesting you should say that. We have had a bunch of write-ins, like I said, for XRP, including Zenith Fund, who said XRP is doing well right now. Even though right now, your old favorites, your old wife there, Bill, ETH is winning right now with 57.9% of the vote, followed by number 2, Doge, 21.1%. Then it's a tie between Bitcoin and other, each of them with 10.5%. Again, that poll just went live before the show. Get on over there at Options, make your voice heard, listeners. Surprising, maybe that shows you where we are in the crypto universe right now, where Bitcoin, a distant third to ETH and to Doge. Speaking of XRP, Bill, we have a lot of questions about this. We have people chiming in on the poll for XRP. We have this question from Andy Seed. He wants to know, why can't you buy XRP in the U.S. anymore? It's an interesting topic. I mentioned this earlier. I went myself not too long ago over there to Kraken, which used to be the home for XRP here in the U.S., trying to buy some only to see exactly what Andy encountered. You can't buy it. Bill, you're a fan of XRP. A, where are you getting your XRP these days? And then B, what do you have to say for Andy, who's having a hard time buying it here in the U.S., sir?
Well, it's very common for the Securities and Exchange Commission to put a temporary injunction or a stop trading order on shares of companies that are listed on the exchanges if they believe it's not in the investor's best interest. I mean, we've seen it throughout our lives. And I think that's what's happening here is that the exchanges, Coinbase and, Kraken and other places have voluntarily removed the purchase of XRP from the trading platforms. I think it's an act of goodwill. And I'm sure there's a little bit of force behind it, with the Securities and Exchange. I think these people are trying to comply. Compliance and regulation is super important to help defend and protect investors from, the things that all the abuses that we've heard about our entire career. And so in terms of where do you buy it, I haven't really looked lately. That's a great question. But until this, I'd be a little bit hesitant on buying it until the SEC lawsuit is settled, because you just really never know where this thing is going to go. XRP could open up at $2 or $2.50 a token, or it could open back up from $1.50 down to 50 cents, depending on the outcome. So until that's really settled, I don't think I would recommend or advise anybody buying it. If you have it already, I probably wouldn't look to sell it or exchange it for anything else. But right now, this is just the world that we live in, and I don't think it's necessarily a bad one. I just think we have to play the cards that have been given to us, and just wait for the smoke to clear a little bit.
Wait for the smoke to clear indeed out there. Of course, the folks who want XRP are going to say they want to get in before that, right? Because then they want to catch that pop. Because once that sort of Damocles, which has been hanging over the head of XRP for quite some time, which is why it languished in the 20 to 40 cent range for the better part of the past few years. There were a lot of lingering questions out there. The SEC, the dilution issue, a bunch of other issues were lingering over it. So I'm sure if folks want to get in there now, they're probably looking to wager on that pop. Going to be a little bit more challenging, it sounds like, in the near future for Zenith Fund and Andy and everyone else who's hitting us up saying they want to get access to some XRP. But good news for folks who already have it. It has held its value this week in the face of a pretty aggressive sell-off out there across the rest of the major crypto assets. So that should at least give you a little bit of heart. Unfortunately, that music means we've come to the end of another epic journey through the world of all things crypto. But before we go, Mr. Bill, if folks are intrigued, they want to reach out to you over there at CENACLE to discuss how you guys bridge the world between traditional asset management and these newfangled digital things. Where should they go? What should they do, sir?
Well, they can call us at area code 847-686-4800. They could send an email out to info@cenaclecapital.com. Or, of course, you can always visit our website at cenaclecapital.com, which will be, our Bitcoin versus gold, or I should say GBTC versus GLD strategy is listed on there. And for anybody who would like more information and the full disclosure, we'd be happy to provide that to anyone that reaches out to us.
There you go. Reach out to them by the old school method of the old telephone. Hit them up on the old Twitters as well, at Cenacle Capital, CENACLE Capital, all one word. And of course, you know where to go to get the latest and all the analytics in the world of crypto. It's just Genesis Volatility, aka GVol.io, the place to kick the tires and light the fires. If any of this stuff we talked about on the show today intrigues you, the volume, the volatility, the SKEW, the OI, all that stuff, and a whole bunch more, GVol.io is the place to go. And on behalf of Mr. Bill and everybody over there at Genesis, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for listening live, for voting in our polls, for asking your questions. Keep it coming. Remember, we do a lot more than just crypto here on the network. We got interviews coming at you tomorrow, Interview Tuesday, Education Wednesday, a big one, I think, for a lot of the listeners of this show who are a little bit newer to the world of options. Check out Options Bootcamp, Options Playbook Radio. Come back on Thursday, episode 2 of the bi-weekly extravaganza that is the Option Block, as well as This Week in Futures Options, also a show that touches on crypto if you are indeed so intrigued, and Friday Volatility Views before we kick it off again next Monday, another episode of the Crypto Rundown.
This program is brought to you by Genesis Volatility, also known as GVol, home of institutional-grade crypto options analytics. Whether you're trading CeFi options or DeFi options, cryptocurrencies move. Use GVol Analytics to analyze implied volatility, model realized volatility, structure positions, and unlock alpha. For more information, visit gvol.io. That's GVOL.io. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.